Tesla, what the F now? We saw that Nvidia was a buy, Lulu was a sell. Can we hit the mark again in today's video? Let's take a look and find out. Welcome to the Green Channel. As always, this is not financial advice. You need to do your own research. Please see the disclaimer in the channel description. We're always building a serious degen community here. We're looking for like-minded individuals who enjoy following the markets and rolling the dice. So please sit back, relax, and let's dive in. Today's Saturday, June 7, 2025, and today we're taking a look at Tesla. But before we do, obviously, we like to start to see how the market is doing. And when we talk about the market here in the degen network that we have here, we look at the QQQ. So as you can tell off of the bottom, in April, QQQs have been doing really well. We've had a nice run up from April through June, pretty much uninterrupted despite all the chaos that's taken place in terms of the markets and the turmoils. Reports have been coming in good, which is why the market's moving good. We're obviously heading into the seasonal summer, which slows things down. In terms of a support, what we like in terms of a support would be somewhere around here, around the 150-day moving average. For those of you that follow us, you know that we follow the Carter Worth School of Business. 150-day moving average is a lot more important than the 200-day. As you watch our videos, you'll see why. So this is basically where we see support on the QQQs around 506. And in terms of a resistance, we're kind of heading near the resistance at around 539. Something that catches our eye, obviously, is the elevated RSI. As you know, it's very difficult for indexes and stocks to get over that 80 mark of RSI that typically will mark a high. And we're kind of approaching that. So we see a little more movement up in terms of the market, not much more, but a little more before maybe we start doing what we did in the holiday season and earlier part of this year, which was move sideways. That's what we're anticipating. All right, so what the F do we do with Tesla? Tesla's obviously almost $1 trillion company, large beta in terms of market play, which is what we're looking for. And we have a good month, month and a half before earnings come out, so we can try to take a position here and see what we do in anticipation of earnings, right? So something we like to watch as well is the implied volatility. The implied volatility has spiked in Tesla due to the recent activity and all the turmoil that's taking place with Doge and Trump and the EV credits that are being disallowed on the bill. So we do like the fact that the implied volatility has changed dramatically. That will help in terms of option pricing, which we'll get into shortly. All right, so what to do with Tesla? Let's take a look at Tesla. Coming off of a nice run, similar to the market. It came in at 220. It had a nice run up around the 350 range. Since then, it's pulled back recently very dramatically. Couple things to note. Stock is at or breaking the Bollinger Band. Stocks tend to always, as you can see on the chart, stay within the Bollinger Bands. It's very rare for them to break it. And when they do, a high volatile stock like Tesla will break it. But when it does, it always tends to work its way either sideways or back into the average of the Bollinger Bands. And you can see here it did it as well. Breaks the band, comes right back in. It can be a sideways move, it can be a downward move, but that's typically how these things work, with people taking profits and all the computers and algorithms out there that are programmed to do this on a daily basis. So here we feel we've caught the bottom of the band. It looks like we're coming back in. I do like the fact that the RSI is sitting at 40. Tesla typically does not stay long and low with RSI. So we might be nearing a bottom point on the RSI, which tells me we're kind of nearing a bottom point on the stock. In terms of support, a good support level was probably right around here, which is what it hit, it looks like here. right around the 270 mark. So it literally touched support and gapped back up to 290, made a nice 10% bump up. We definitely like it. We definitely like the fact that 270 is a good support level here. In terms of on the upside, it looks like, we had this nice channel that we're working that we broke. But you're probably looking at maybe around the 360 range in terms of Tesla. So obviously the chart's a little broken right now, but we did bounce off of resistance. We do have an earnings report coming out in about a month and a half, so that's something to be optimistic about. A lot of good things happening at Tesla. Musk leaving Doge will be positive for Tesla, so we're kind of bullish. Now, in terms of what to do with the stock, if you want to buy the stock, we never like to buy the stock outright. We usually will, at this point, since we want to get in, but we're worried about a little bit of downside risk, 270 being our support, we probably want to look into some options, right? So let's see where the options market is pricing Tesla to go. So as you can see, this is the implied volatility for the projected earnings report back in July. And let's take a look at the puts and the calls. So the stock's trading at 295. So if we go to the 295 call and put, you have $30 here and 27 here. So you're looking at about a $60 projected move in the stock when it comes to earnings. A $60 move can be anywhere from, they're looking to be at 350 or down as low as 240. With that wide range, it's kind of scary to just go in and buy a stock. So what we typically like to do is we'll want to write some puts. And we want to get in before earnings, and we want to find one where the price of the volatility, we're going to get paid nicer, right? So based on volatility is how much premium we collect. So the higher the volatility, the higher the premium. So when you're writing puts and you're collecting premium, you're going to want to find stocks that have high implied volatility. So if we go to the June 2025, they expire in 13 days, but since today's Saturday, they're really expiring in 11 days. So that works to our benefit as well because we're cutting a couple days there. So let's take a look at the June 25. Let's try to find maybe on the put side the 275s. So we would probably write the 275s. It's coming in at a midpoint of 775. So we will receive $7.75 for every contract that we write. So based on that, the current price is $295, strike price $275, expires in 11 days. We're going to receive for every contract $775. That's going to be our max gain. Our max loss is going to be unlimited, obviously, because there's no downside here in terms of Tesla. It could go to 230, could go to 210, but we like the stock and we want to buy it, so we're willing to take that risk. And basically, by receiving this premium of 775, we're ensuring ourselves a break even on the stock of 287. So Tesla could fall to 287, and under this strategy, we're still breaking even. We haven't lost any money. And again, we're only doing this for 11 days. And most brokerages, for you to be able to do this, to write puts, you are required to keep some margin. So you got to have at least 20% of the value of the stock. So if one contract is 100 shares, you're going to need $29,000 for the stock. Margin requirement 20% is $5,900. So you now have to put $5,900 in your account to collect 775. That's going to give us an expected return of 13%. Not bad for 11 days worth of work for your money. And if you annualize that, obviously, if we could keep doing this and keep getting these 11% clips every 2 weeks, the annualized returns would be astronomical. That's why we enjoy doing these strategies. Again, you only want to do them when they're available, when the stock is depressed, and premium volatility is elevated so that we can increase what we receive. So that would be the strategy that we would take. We would not be buying Tesla. We would be writing puts to work our way into a position into Tesla. and we would be doing it with the June 2025 275 strike price, collecting a nice premium of 775. So that's basically what we would be doing. And again, just for full disclosure, we do not have a position in Tesla. We do not plan on taking one. If there is any tickers you'd like for us to analyze, please leave it below in the comments. And again, we'll take whatever the most mentioned ticker is and try to do some work on it. Let us know what you think of the trade. Thumbs up, thumbs down, or any alternative ideas. We're trying to build a community of degens here. And at the end of the day, it's please watch our next video, subscribe, and turn on notifications. Enjoy your weekend, guys, and happy trading on Monday.